Hey guys, welcome to the View Cryptos channel. Stellar XLM is doing really great these days. The price of XLM is above 21 cents. The price change for the last 24 hours is approximately 13% plus, and the price change for the last 7 days is almost 140% increase. This is really huge. XLM is really doing very well. The price of XRP is currently a little bit over 64 cents, and the price change for the last 24 hours is 22%. Ethereum is up with 7.4% and Bitcoin is up with 6.2% for the last 24 hours. And guys, a really interesting job posting from Stellar Development Foundation. They're looking for business development manager, consulting ecosystem. Interested in helping us change the world of finance and payments forever? The Stellar Development Foundation is looking for a talented and experienced business development manager to join our team. In this role, you'll be engaging directly with global and specialized consulting firms and system integrators as a primary point of contact for the SDF. You'll be providing support on helping them understand the Stellar network, how they can bring their public and private sector clients onto the network, and what role the network can play in central bank digital currency initiatives. I will repeat that, and what role the network can play in central bank digital currency initiatives. Most importantly, you will be growing the world of blockchain and supporting SDF's mission of creating equitable access to the global financial system. You will source, qualify, and close large transformational global consulting partnerships that add value to the entire ecosystem and lead us to large private and public sector implementations, including CBDC projects. So this is really huge. You know that Ripple had similar job posting, and now we see that Stellar also looks for actually business development manager who will engage in CBDC initiatives. So this is really huge news. Next, Stellar Lumen, first stablecoins in Brazil and Argentina, launched. 2 new stablecoins have been introduced by Seto Network on the Stellar blockchain. The partnership between Stellar and Seto Network strives to make cross-border payments easier and faster in Argentina and Brazil. Seto Network has launched 2 new stablecoins in Argentina and Brazil. Both stablecoins are based on the Stellar blockchain and are the first ones in each country. According to the report from Crowdfund Insider, ARST is backed 100% by the Argentine peso, and BRLT is backed by 100% of Brazilian reals. Both are set to involve bank-grade KYC verification, AML controls, and blockchain monitoring. The cooperation partner of Stellar, the Seto Network, is the largest digital assets settlement network across Latin America for exchange and cross-border payments. Within the partnership, Stellar is providing an infrastructure capable of connecting financial institutions via cryptocurrency payments. It was also announced both stablecoins can be traded against Bitcoin and Ethereum. Furthermore, they can also be traded with other stablecoins. ARST operations are already available in Stellar's wallet Vibrant and will soon be listed on multiple global exchanges together with BRLT. Seto Network's CEO Pablo Orlando expressed his delight at the fact that ARST and BRLT are coming to the limelight. He stated that the Latin American market had been in dire need of the use of blockchain and cryptocurrency. The emergence of these new stablecoins will allow users to instantly send Argentine pesos and convert them to Brazilian reals within seconds. This will open up a channel that makes international remittances and cross-border payments faster and easier for everyone. Latin America has illustrated one of the largest needs and use cases for blockchain and cryptocurrency adoption. This is a key moment for Latin American users. The new Settle network and Stellar stablecoins allow users to virtually send Argentine pesos and convert them to Brazilian reals in a matter of seconds, opening a new world of possibilities for international remittances and cross-border payments. We are very happy to work with the Stellar ecosystem to achieve such an important goal for users in Argentina and Brazil. This is the beginning of a massive adoption process in the whole region, and we want every user to be a part of it. We are actively integrating our stablecoins to multiple platforms. Argentina and Brazil are Latin America's top markets. These two countries are the most involved in cross-border payment and remittances. Brazil has the 9th biggest economy in the world, boasting of a high GDP as of 2018 of over $1.8 trillion. Argentina has the 2nd largest economy in Latin America, just behind Brazil, with its GDP standing in 2018 at $518 billion. So really huge news, guys, really bullish about the Stellar network and XLM. And guys, let's take a look at the Settle network. So the Settle network actually provides borderless tech and infrastructure that bridges the gap between traditional and the digital finance. Settle enables compliant interoperability between local currencies and digital assets, providing the technology, infrastructure, and user experience to grow your global business. Use cases: Settle's partners come from several industries, digital assets and crypto. Settle works with some of the most important digital asset exchanges, issuers, and wallets to operate with domestic banking and payment rails seamlessly. Remittances: Settle collaborates with partners in the remittance industry that leverage Settle's wallet OS to deploy consumer-friendly apps. Using Settle's services, our partners are able to deploy apps that are locally compliant, secure, and provide a seamless experience. Digital goods and content: Settle works with partners that sell digital goods globally and that require local methods of payments to reach their local audience. Payments: Settle partners that sell digital goods globally. Okay, so, and Settle network solves the challenges of accepting and making payments globally. Settle runs on top of a powerful layer of fintech and compliance infrastructure that leverages the liquidity of digital assets and local currencies to allow for cross-border payments in a seamless manner. And local regulatory infrastructure, liquidity network, strategic partner network, domestic banking rails, cash networks, credit and debit cards. And one very interesting blog post from Stellar: making cross-border B2B payments easier in East Africa with ClickPesa. At the Stellar Development Foundation, one use case we focus heavily on is B2B cross-border payments. On the Stellar network, anchors use SEP24 to offer the ability to make cost-effective cross-border payments to its clients. One anchor taking advantage of SEP24 is ClickPesa, a fintech company that aims to simplify the way companies do business in East Africa and beyond. So SEP24 specifies how anchors interoperate with wallets to allow users to deposit and withdraw assets. What does ClickPesa do? ClickPesa provides a B2B payment platform to companies that offers invoicing, payment, and e-commerce functionality. The platform's emphasis on clean UI and simple interfaces allow SMEs to simply create a portal account that either connects with their existing bank account or creates an entirely new one, powered by a straightforward and quick KYC process. ClickPesa serves companies currently based in Tanzania, which has been live and operational for several years, Kenya and Rwanda, which will be operational in the near future. Seeing an opportunity to reduce the friction inherent to intra-African cross-border payments and P2P payment activity, ClickPesa also serves as an anchor on the Stellar network and provides on-off ramps to the banking systems of Tanzania, Kenya, and Rwanda. Having ensured their technology is fully compliant and operational on the Stellar network, ClickPesa is now working on direct integration into the top 3 mobile money operators in East Africa: Tigo, Vodacom, M-Pesa, and Airtel. This means that ClickPesa is now able to leverage the Stellar network to enable someone to send a payment directly from a bank account in Berlin to a recipient's mobile wallet in Tanzania. So the Stellar network is growing, as you can see, and this is very bullish for the future price of XLM, of course. And guys, let me share with you this speech by Fabio Panetta from the ECB, from the payments revolution to the reinvention of money. Retail payments play a fundamental role in our daily lives and for the economy. Last year, adults in the euro area made 2 payments per day on average. The universe of retail transactions amounted to 213 billion payments, 2 million every 5 minutes, with an estimated total value of 164 trillion euros. As part of its mission to promote the smooth operation of the payment system, the euro system has 2 main objectives in the area of retail payments. The first is to guarantee that people have access to efficient payment solutions that meet their preferences. The second is to ensure that transactions remain safe, underpinning confidence in our currency and the functioning of our economy. Technological innovation means that the policy implications of these objectives are changing, and new opportunities and risks are emerging. Today I will present the Eurosystem's response, a strategy for empowering Europeans with efficient, inclusive and secure payments in the digital age. And I will argue that the impending revolution in payments requires us to stand ready to reinvent sovereign money. People want payments that offer convenience and safety at a low cost. Convenience requires payments to be easy to use, fast and widely accepted, while safety requires low risk from an economic, financial and societal perspective. With the growth of e-commerce and connected lifestyles, people are increasingly demanding immediacy and seamless integration between payments and digital services. At the same time, they are increasingly concerned about privacy, cybersecurity and reliability. The coronavirus shock has accelerated the trend towards digitalization, leading to a surge in online transactions and contactless payments in shops. This trend is likely to persist once the pandemic is over. Generally, Europe is increasingly relying on foreign providers, with a high degree of market concentration in some segments, such as card transactions and online payments. We should not let this reliance turn into dependence. We must ensure that the payment market remains open to competition, including from European suppliers and technology. Fintech companies have sparked the latest wave of innovation, accelerating the evolution of the payment system. The global tech giants, the so-called big techs, are aiming for a revolution in the payments landscape and represent a threat to traditional intermediation. These firms can use data-driven models on an entirely new scale by leveraging their large customer base, real-time data and control of crucial infrastructures for commerce and economic activity, from online marketplaces to social media and mobile technologies. They can use these advantages, their financial strength, and their global footprint to provide new payment solutions and expand in both domestic and cross-border transactions. This would offer them an even stronger base to further expand the range of their financial activities, including lending, as their superior ability to collect and analyze large volumes of data gives them an information advantage. And here you can, you know that they are talking about Facebook, because you see that Facebook cryptocurrency Libra to launch as early as January but scaled back. Facebook's Libra cryptocurrency is readying to launch as early as January, the Financial Times reported on Friday, citing 3 unidentified people involved in the project. The Geneva-based Libra Association that will issue and govern Libra plans to launch a single digital coin backed by the dollar. Let's continue with the speech. We should safeguard the role of sovereign money, a public good that central banks have been managing for centuries in the public interest, and that should be available to all citizens to satisfy their need for safety. Monetary sovereignty could also be threatened if foreign central bank digital currencies became widely used in the euro area, with implications for international monetary spillovers. And that's why I think that the big central banks are in a hurry in order to get ready with CBDCs, and the best blockchains for issuing CBDCs are, of course, the XRP Ledger and the Stellar network. And you know that the central banks are looking at these blockchains, and in my opinion, next year we are going to see some big announcements. And you see that already the Stellar Development Foundation is looking for a manager that is going to engage with CBDC initiatives and with central banks. So it's going to be really, really interesting to see what's going to happen next year. As we aim to enhance the efficiency of European payments, we therefore need to be prepared to rethink the nature and the role of sovereign money. As part of our comprehensive policy, we are working to safeguard the role of sovereign money in the digital era. We want to be ready to introduce a digital euro if needed. Oh, it's going to be needed, believe me. A digital euro would combine the efficiency of a digital payment instrument with the safety of central bank money. It would complement cash, not replace it. Together, these two types of money would be available to all, offering greater choice and access to simple, costless ways of paying. We have started a public consultation to seek feedback from people across Europe and gain a better understanding of their needs. It will be completed in January, and the results will be published once they have been analyzed. So it will be completed in January, and also Facebook cryptocurrency Libra is going to launch as early as January. Okay. A digital euro would need to be carefully designed in order to enhance privacy in digital payments, respect the rules on countering illegal activities, and avoid interference with central bank policies. First and foremost, monetary policy and financial stability. In particular, a digital euro should be a means of payment, not a form of investment that competes with other financial instruments. This would require limiting the holdings of individual users and mean that, unlike stablecoin issuers, the issuer of the digital euro, the ECB, would not aim to acquire deposits. A digital euro would support the modernization of the financial sector and the broader economy. It would be designed to be interoperable with private payment solutions and would thus represent the raw material that supervised intermediaries could use to to offer pan-European front-end payment solutions. A digital euro would also generate synergies with other elements of our strategy, facilitating the digitalization of information exchange in payments through invoices, e-invoices, e-receipts, and e-identity and e-signature. The ECB and the national central banks have started preliminary experimentation through 4 work streams. First, we will test the compatibility between a digital euro and existing central bank settlement services, such as TIPS. Second, we will explore the interconnection between decentralized technologies, such as distributed ledgers and centralized systems. Third, we will investigate the use of payment-dedicated blockchains with electronic identity. And fourth, we will assess the functionalities of hardware devices that could enable offline transactions, guaranteeing privacy. And the conclusion, the digital transformation is triggering a revolution in the financial sector, which will bring innovation but also risks. In particular, big techs and stable coins could disrupt the European financial system, and while they could offer convenient and efficient payment solutions, they also risk endangering competition, privacy, financial scalability, and even monetary sovereignty. What is at stake is nothing short of the future of money. As private money goes digital, sovereign money also needs to be reinvented. This requires central bank money to remain available under all circumstances in the form of cash, of course, but also potentially as a digital euro. We want to enable people to choose their preferred way of paying without having to compromise on their expectations of fast, secure, inclusive, and seamless payments. This is our aim today, and it will remain our aim in the future. So guys, as you can see, the European Central Bank is really looking forward to modernize the euro and to make it digital, because the world is changing, and it is changing really fast. The economy is changing, the financial system is going to change, and other central banks are also looking at CBDCs. So the ECB is not going to be left behind. They're not going to leave the euro, and they're going to make it stronger. They're going to modernize the euro. So this is really good news for XRP and XLM, because the best blockchains at the moment for issuing CBDCs are the Stellar network and the XRP ledger. They were designed for that. They were created for this purpose, and they are fast, efficient, secure, and scalable. So we know that central banks are already looking at the XRP ledger and the Stellar network. Brad Garlinghouse told us that central banks are looking at the XRP ledger, and the CEO of Stellar was invited to the IMF conference about cross-border payments. So there they discussed that the Stellar network can be used to issue CBDCs, and this is actually huge news. So the future is bright for Stellar network and the XRP ledger, and XLM is going to be used as a bridge currency for cross-border payments, and it is already being used. You saw the news about Africa and about Latin America. So really great news, really great developments. All in all, I'm very bullish on XLM. Okay guys, thank you very much for watching. Please like, subscribe and share so this information can reach more people. Be safe and see you next time.